Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CITIC SEC interim report. CITIC Securities Company Limited offers a wide range of financial products and services to clients globally. Some of the key businesses and services provided by the company include investment banking services, broking of securities and futures, trading and market making of various financial products, asset management services, including collective asset management and fund management, private equity investment and other services, institutional stock brokerage services, finance outsourcing, bond issuance, venture capital, consulting services, information technology development services, business information and technical consulting services, system integration and sales, data processing, commodity, trading, warehousing and transportation service, agents. The company's diverse range of services caters to various needs of its clients, from investment banking and asset management to finance outsourcing and commodity trading. The skyrocketing of CITIC SEC stock price, a multifaceted phenomenon. CITIC Securities stock price has witnessed a remarkable surge of 104.32% in the past year, with a 131.5% increase over the last 365 days. This phenomenon can be attributed to a combination of factors that have collectively contributed to its robust financial performance and market appeal. Robust financial performance is one key driver, with CITIC Securities reporting a significant rise in net profit for the first half of 2025, propelled by substantial increases in investment income and net fee and commission income. Favorable market conditions, including a rebound in Chinese and Hong Kong capital markets, have also played a crucial role. The company's attractive valuation and high dividend policy have drawn considerable investment from mainland Chinese investors through the southbound capital channel. Strategic reforms, including a focus on technological and financial innovation, green finance, and international expansion, have further enhanced its capital strength and global presence. Positive analyst sentiment, with buy ratings and strong buy technical signals, has also contributed to the stock's outperformance. Overall, CITIC Securities' strong performance is a result of a synergy between robust financials, favorable market conditions, strategic reforms, and positive analyst sentiment. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers. The company's revenue has grown significantly due to a combination of factors. Key contributors include domestic securities market growth, increased trading activity, expansion of client base, and double-digit growth in overseas wealth management products, sales volume and revenue. Additionally, the equity derivatives business, research business, brokerage business, asset management business, and investment banking segment have all experienced significant growth. Revenue decline drivers. On the other hand, there is limited information on revenue decline drivers. However, two notable exceptions are CITIC Poly, Guangzhou, Private Equity Fund Management Co., Limited, revenue growth decline of 68% and a decrease in interest income on financial institutions by 13.9%. Net income and profit margins. A period-on-period analysis. The financial summary reveals a significant increase in net income, rising by 29.79% to RMB 13,719 million period-on-period. This growth is accompanied by an expansion of profit margins, despite a moderate increase in operating expenses. The 10.76% rise in operating expenses was outpaced by the 16.28% surge in revenue, resulting in improved profitability. Based on the provided financial summary, it is clear that the company is indeed generating positive operating cash flow. This is a significant indicator of the company's financial health and stability. The fact that this trend has continued for at least 6 months, as stated in the report, suggests a strong foundation for future growth and profitability. The company's debt level and interest expenses have undergone significant changes over the past year. In terms of debt level, while the total debt remains unchanged at $1,344,077,033 and $1,425,380,336, there are notable shifts in its breakdown by maturity. This suggests a reorganization of the company's debt structure rather than an overall increase or decrease. However, interest expenses have seen significant fluctuations. On one hand, financing interest expense has decreased by 11% from $3.82 billion to $4.29 billion. On the other hand, interest expenses have increased significantly in RMB terms, rising from RMB 9,208,508 to RMB 9,283,797. Additionally, there is a notable increase in interest expenses in 2025 compared to 2024, with a significant jump of 223. Overall, while the company's debt level remains stable, its interest expenses have seen mixed trends, indicating potential changes in its financial obligations and costs. The company's financial summary reveals a mixed performance across various regions and segments. On the positive side, domestic operations, equity financing business, debt financing business, underwriting size, private placements for state-owned banks, public listings of science and technology-based enterprises, bond underwriting, and investment banking all performed well, with notable rankings in their respective markets. In contrast, brokerage, asset management, and others segments struggled, with the latter's performance unclear due to its association with profits and losses of associates and joint ventures. The trading segment also experienced a significant increase in operating profit, but no specific ranking or market share is mentioned. Overall, while some areas showed strong growth and dominance, others faced challenges that need attention. Management is optimistic about the company's outlook, citing significant growth in major financial indicators such as revenue, 16.28%, operating profit, 26.86%, and net profit attributable to owners of the parent, 29.79%. The company is actively pursuing international expansion by strengthening its business presence in Hong Kong and other regions. To achieve sustainable growth, management has outlined 5 key strategies. Finance serving the country and people, improving quality through innovation, pioneering sustainable growth, upholding a people-oriented approach, and securing well-being. Additionally, the company aims to promote the construction of first-class investment banks and institutions, improve corporate governance, and prioritize ESG issues. Management emphasizes the importance of serving the real economy through custody business and enhancing capability to provide customized financial services for professional institutional clients. The company is committed to green finance practices, with a record-breaking underwriting scale of RMB 38.7 billion in green bonds. Overall, management strategy focuses on sustainable growth, innovation, and prioritizing ESG issues to drive long-term success. The company has a history of paying dividends to its shareholders. This is evident from multiple references throughout the financial summary, including pages 2, 11, 41, 82, and 176. The amount of dividend paid varies, but it is consistently stated that the company has indeed distributed dividends to its investors in 2025. Concerns about inventory buildup and supply chain disruption. The financial summary highlights potential issues with inventory buildup and supply chain disruption. 2 key indicators point to these concerns. A significant increase in impairment losses related to inventory from RMB 4177 in 2024 to RMB 28,545 in 2025, and an increase in inventory levels from RMB 722,622 in 2024 to RMB 20,988 in 2025. These metrics suggest that the company may be experiencing difficulties managing its inventory, which could lead to supply chain disruptions and negatively impact business operations. That concludes the financial summary for CITIC SEC. Feel free to comment below, and I will be happy to answer them when possible.